Hey, can you hear me? Hey, you can hear me? All right, cool. Let me go ahead and start my screen share. And we're going to go ahead and jump into the futures lesson. So I'm going to go ahead and just cover some chart work real quick. Um, okay, cool. So you should be able to see my screen share here. Okay. Let's see. Yeah, yeah, for sure. So as soon as you put down your order, you should see the take profit and the stop loss. Yeah. So I put this trade down a couple days ago. So I've just been letting it run. Okay, so I'll go ahead and I'll break it down here. But as far as that, you should just be able to put down your order. I don't want to put down an order and then it ruin this trade. But you should be able to put down your order and then you'll have your stop loss and take profit. So what you can do is just do the paper trading directly on the trading view. And then when you, yeah, yep, yep, this, yep. And then you just sit there and let it run and then keep everything automated. So yeah, it's a nice one. You could do 1 to 3 minimums. 1 to 3 minimums. Yeah, that's why it is. Yeah, recent support on the 15 minute, or a lot of the times, go ahead and have black line marked. A lot of the times here, you see how that's a daily low, uh, right here. Okay, so this candle's a daily low. So a lot of the time, your stop loss will be below a daily low too. Okay, and then we can see price just doing its thing, and then we can, inshallah, pull up by now at least to this resistance here. Okay, and then head over to the resistance area up here. Mm, nice. Okay, cool. So was it? I assume it was like probably like here, or something like that. Okay, nice. Yeah, nice, nice. To just so it, cause then you see how many trades did you take? Three? Yeah, 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 yeah. Okay, so that's the one thing about futures is you can end up catching yourself, especially if you live on the smaller time frames. That's why I tell you guys always do your top down analysis. So it's like you still will win, right? But it can be really stressful taking trades over and over and over again like that, looking for multiple formations when on the higher time frame it's probably just that's probably just a good entry and then you let it swing to just a giant take profit. Uh, So yeah, see that's one thing where like unintentionally on futures you can just end up taking a bunch of trades. Literally, that's the main thing. So having that margin, which we're going to talk about today, I'm about to load up the presentation. Having that margin to let you swing overnight really lets you help figure a lot of things out and correlate everything together. Yeah. Okay. Okay. Gotcha. Did you see on your higher time frames the real setup that's formed? Because I could get on my 15 minute here. This is what could be tricky. All right, even if I delete everything, right? Right, I could live on the 15 minute and say the V structure starts here. Okay, and then take this as my take profit. But this isn't really a lot of money. You know, this is still going to be some profit, but then you would just be risking again to take another small V. One whole time, if I get on my weekly, okay, we can see price wants to push all the way. So we got all time highs wick. We got this wick, okay, to the top of the weekly candle. And then we got this wick here. Okay. Then if I go to my daily, okay, we could see the same thing. 4-hour. Okay. And then if I want, I can move this up to this resistance because we want to play off recent ones. Okay. And then 15-minute. Okay. Then you could see everything. So even if you deleted this one here, okay, this isn't even the true V. Okay, because this is just the 15-minute. Okay, but if I get on my 4-hour, I could see the true V really starts all the way down here. And then trickles all the way up and then ends up here. Yep. And so you can enter off your 15-minute because you want to get a good entry. So that's the thing too. So, I said the V starts all the way down here. Okay, it's kind of hard to predict exactly where the market's going to bottom out. So once you see the trend starting, you see market making lows and then another low. Okay, this low is higher than this low. Okay, so you see market bottom out. So it first started all the way up here. Okay, this is the top left of the V. Market fell down. Okay, trickle down, trickle down, trickle down. Okay, then market decided to bottom out down here. Afterward, it bursted up, topped out up here for a second. After that, it fell down. Okay, it started the left side of the V, came down, and bottomed out again. Okay. So from this circle to this circle, that in itself could have been a trade, but that's not the true complete V. Okay. So it's like, yeah, that would have been some money. So this is around, it still would have been some good money. This is around 500 or 480 ticks. But just for you to open up another trade that could potentially hit stop loss just to continuously farm the trend when you could have just placed down one trade, waited, and then cut exactly, and then cut the whole thing. Yeah. Yeah. And the reason too, and a trade in April really helped me out before I went to go see my wife. Like I traded really, really hard. It was during the April low, and then market was in a straight uptrend during that time, and just caught long scalps every single day. That was when I posted a lot of scalps in the Discord. But then I started realizing like there wasn't any point to go that hard in day trading, even after failing for 2 years and then finally getting a consistent edge. Then I was realizing the money that you get from trading every single day is not worth the mental stress, and like your mental health isn't worth it, because like even though we still are humans, so you can even see in like some of the really good traders, like we're humans, so trying to minimize as much hands-on action on the charts would be most ideal, especially on something like futures. That's why people struggle a lot on prop firms, because it's just too much leading with their flesh. It's not a lot of discipline, especially when it's as easy to just open a trade, close a trade, open a trade, close a trade. Options, you got to scroll down, find the strike price contract, find the stock. It's a little more intricate. It's not easy to crash out on options. Definitely still can, but it's not as easy. But futures, it's the easiest instrument to crash out on for sure, and just abuse your power as in your leverage as well too. Okay, so then let's talk about the 15-minute too. So you could see it on the 4-hour, but 15-minute helps you see the higher lows. So this is when it's really going to be a good time to buy. Okay, so I bought at this blue line here. Okay, I think I bought like right here. So yeah, I think I bought right here, and I have my stop loss underneath this low right here. Okay, which is gonna be that daily low right here. Okay, so even though I'm on my 15, I still get everything from my higher time frames. Okay, so the reason why I decided to enter in right here, okay, is so I failed a lot, and a lot of people fail in the markets trying to time where market's gonna bottom out or even top out sometimes too. Okay, so we just have to play off of what actually already occurred. Okay, so the truth is market fell from this area. Okay. So I know that market, especially the United States stock market, which runs off of companies going in an upwards trajectory. Okay. So we know more employees, more buildings, just like I talk about all the time. Okay. So then more taxes can run through the economy. Okay. So then from there, we know that price will always want to try to make new all-time highs over and over again. So we can logically put in a conclusion that price will want to chase all-time highs. And in order for that to occur, price will need to break previous areas of resistances and support above it. Okay. So once I start seeing two things, I start seeing price make higher lows. Okay. So I'm not trying to predict the exact bottom of the market, but what I'm going to do is go ahead and read the market. I can see that market's going in an uptrend since market goes up, falls down, but when it falls down, it's higher than the last time. That lets me know it's in a staircase uptrend. Okay. And when you start seeing staircase uptrend, you can put your take profits at areas of resistances because you know price isn't just trying to go up infinitely, it's trying to break areas of resistances. And we don't trade breakouts, we trade gap fills, I like to call it. Okay. So it's pretty much just like a more of a logic ideal. So when I'm on my 15-minute, okay, and even when I do my top-down analysis, but even when I'm on my 15-minute, what I'm looking for, okay, because the higher time frames personally are easier for me to read, okay, but when you're on your 15-minute, which is a vital piece of information, in my opinion, on futures, then I can go ahead and see the information I need to see a little closely. When I'm looking at stocks and crypto, though, I don't bother with the 15-minute. There's no point. Just stick to your 4-hour, daily, and weekly after you get your futures profit and then funnel it back into some cryptocurrency. But until then, when we're getting our futures profit, okay, entering at key areas is really going to try to help. Okay, this way you're not going to experience the least amount of drawdown and your stop loss is going to make sense. Okay, so my stop loss is always going to be previous area of support. Okay, because price should be making higher lows. If it's not, and price decides to invalidate that area of support, we're going in a downtrend. Okay, we're going in a downtrend. So I can see here, price decided to bottom out right here after bursting up. Okay, then price decided to go up and bottom out right here. Okay, price decided to bottom out right here, which is a higher low. So I'm very confident in this trade. So inshallah, I should be able to hold this trade for a couple more days, let price make a bunch of higher lows. And even if it goes down, I feel like I got in a pretty good higher low. So I can see on my higher time frames, the full V really starts down here. All I entered at was just a higher low. Okay, just like there's a higher low right here. Okay, and a higher low right here. Okay, all I did was enter at a higher low. So that's really just the most intricate thing about futures when you got to really get in depth is entering at a higher low, because then you got to actually have a stop loss. When you're playing shares, crypto, or options, you don't got to have a stop loss. You could just kind of enter in and wait. But futures, you got to have a stop loss. You do not want to get margin called. Okay, because once again, you get margin called, then you owe the broker money, and they'll come to their conclusion whether or not they want to sue you to try to get their money, or you'll just be banned from the broker, etc. Okay, a lot of things. Okay, so try to enter at a higher low on futures. Let me go and pull up the ES chart before we talk about margin here. Yeah, the 15-minute, right? So that's why I try and really keep you guys on the higher time frames, and literally exactly what you just said. So I notice in life, like, we can really say the answers out of our mouths unintentionally. So bunch of chart work here too. We could see price heading up in an upwards trend. I marked out this trade here too a couple of days ago. We hit take profit. So yeah, thank God. So very, very clean. But even this take profit small. It's really about psychology too. So one thing even I'm trying to improve on, right? Especially just getting better for you guys. I want to start posting crazier flips and just start showing you guys crazier numbers on the channel. To just show you guys that it's really possible. Okay. So even this take profit, I think is small. This is a 1 to 2. And that's really the thing I love about trading is the market moves every single day. So crypto's 24/7, and then you got the stock market, which is 5, 6 days a week. So I really love it. It's always room for improvement every single second. Okay. Every single second, there's more room to be more disciplined than you were yesterday. Okay. And if you're not, your numbers will show that. Okay. So it's a real competitive game and I really just love it. But so I think I'm significantly better than I was, I'll say like a week ago when I put on this trade. Um so yeah, this trade I played for a 1 to 2. And really just getting back in the futures group too. It's really just been stacking Bitcoin, like I showed you guys in another video, and stacking a bunch of shares, and stuff like that. But getting back in the futures bag and realizing that it's all the same thing has been really, really cool. So I'm excited to show you guys some numbers and some flips for futures too. Um, just like I've shown you guys some options numbers and stuff for a while, but and I still have some options, some leaps for next year too. So I probably can show you guys some numbers on that when those hit take profit. But getting back in the futures groove, um, yeah, it's really been something like realizing that price decides to move the same way, even when you on your 15 minute. So nice job catching those mini V's, okay? Because you realize that wait, it's the same thing, but it's the mental health aspect that comes into it, you know. So yeah, it's and this is what I even like tell anyone around me who trades really. Like it's the mental health aspect of it. It's not the money. Cuz you can win 28 days straight catching mini V's, right? But then next month you could lose 15 mini V's. And then you might think you're the worst trader of all time. And it's not true. Okay? So when you're going through so much emotional turmoil quickly, okay, your brain can be like jumbled. So that's why it's important to just yeah. Yeah, exactly. Just stay on the higher time frames. Just zoom all the way out, chill, see everything for what it is. Okay? Because on the 15 minute, I realize now, it's not the real story at all. Okay? It just looks like a bunch of zigzag action. But if I hop on my 4 hour here, even, and I just zoom out and use my eyeballs, I can see that price wants to top out to a way higher resistance area, such as up here, which it did. Okay, so I could have made myself, instead of a 1 to 2, all right? So it's important to not hold yourself back, all right? You got to go hard, okay? You got to go hard. Direct yourself forward, okay? I held myself back right there playing for a 1 to 2, okay? Was definitely holding myself back when I could have been on my higher time frames. Exactly. I could have caught myself a 1 to 4 playing for a more confident resistance, okay? If I'm going to call myself a trader and put myself in the game, I'm going to stand on business, okay? So I'm ready to take better trades, bigger trades, and post some better numbers for you guys, okay? Because this game is really, really psychology based in every single way, and it's really cool how we get to get better, waking up, praying, and just checking out the chart and staying focused and locked in on what we want to do, okay? And it's really the difference in this world of who's locked in on what they want to do and who's just not, okay? And the trader who's confident in their take profits a lot of the times gets to where they want to be, okay? So I'm learning even myself, Chris, don't hold yourself back. Taking those small, it's not small trades, I'll say, but when I could be taking even bigger trades, okay? Or catching even bigger trades, okay? So yes, I'm winning, and this is when I had to rewire my whole mindset, especially in the beginning. In the beginning was quite profitable. Didn't know what we were doing. Started with my friend and didn't know what we were doing, but we were making money. But through just trial and error and stuff like that, I started just gaining, just winning satisfaction where I just wanted to win from the market. But I'm understanding that you're trading on the market for profit, especially when it comes to futures. That's the highest income generating thing you could trade other than some leverage forex, okay? But as far as just normal standard instrument, futures is the highest leveraged profit making asset that you could trade. So not just being happy with that small win, okay, and being happy with that beast win is really what's gonna set you apart, okay? Because when you're taking beast wins, not only are you not sitting there staring at the chart over and over again, Because if I catch that mini V, what am I going to do? Come back to the chart again, catch another mini V. Okay. You might mess up. You might crash out. You might not have checked news, etc. All types of stuff could have happened when you could have caught that really good solid higher low entry. Okay. And stayed in the trade. Okay. So look at that entry here. So I entered right here. Okay. I entered on this black line. Okay. If I get on my 4-hour time frame, okay, and you see I have my stop loss down here at this black line. So I entered at the first black line, and my stop loss is at the second black line. Okay. Did price go underneath the second black line? Okay. And that's completely my fault. Okay. I was confident, and this game is so psychology based, and it's really important to just take that full accountability. Okay. And I check myself constantly, like, Chris, you could have got way better right there. Okay. I was confident in my setup. Okay. But I was confident in only one piece of my setup, though. I was very confident in my stop loss. Okay. I analyzed price making higher lows, trending in an upwards direction. Okay. And I analyzed that this would have been a pretty good solid stop loss. Price decided to even consolidate in this area. And I like the fact that price decided to bounce at this area right here twice. Okay. Big fan. Okay. At the middle black line. Price even bounced there, confirming another higher low. Okay. So then from there, I should have been like, you know what? Why am I limiting myself? So I should have been on my 4 hours, zoomed out, and caught a bigger take profit. Okay. So then from there, I was like, okay, more improvement to be made. Okay. A setup? Yeah, for sure. For sure. Yeah, for sure. It's really just about eyeballing it. Um, actually, yeah, yes and no. So that was a good question. I like to look for areas like this. So this is a good sign for me. So I like to look for this left side of the V being made. Okay, but the 15-minute helps you see what you need to see, especially on futures. So on futures, I'm gonna say no. Okay, you really do need your 15-minute. But if you have this high area here and price falls down, okay, price decides to bottom out right here. Okay, I gotta see this 15-minute bottom. Okay, just for futures. Okay, and then this is gonna give me my answer. Okay, so I'm gonna go ahead and say no. So you need your 15-minute, because then on the 15-minute I can see the staircase for exactly what it is. Yep, yep, yep. And you can see this all in the 4 hour as well too, but just on the 15-minute for futures it makes a little bit more sense. Like even right here, okay, I can start seeing price decided to bottom out here, come up, fall down, and I think this bottom should be true. This bottom should be true, but I would need to see a little bit more green candles, and then if so, you could go ahead and enter in. And then you want to make your trade worthwhile. Yeah, and that nervousness goes away after you win a few times, but be better than me. Like when you do start winning, like don't be comfortable with just winning. Like keep your eyes all the way on the prize. Okay. Because you could close for like a 1-to-1, a 1-to-2, but that's not gonna get to where you want to be when you could be where you want to be by just having more conviction and patience in your setup. Okay. So boom. Yeah. Yep. Yep. Because you'd be surprised. You don't. Right. You don't want to be in the mental limbo that I find myself. I put myself in. That it's like you don't want to be like, man, I could have held this trade way further. Just like the trade I posted for you guys in the Discord. Warner Brothers. Look at this. Crazy. I think it was Warner Brothers, if I'm not mistaken. I posted this for you guys. Like, you can see this V here. I'm going on. Yeah, I posted this for you guys around like $12 a share in August, and we're around $26 a share. Okay, so, and I was playing for baby take profit to like 13 when I could have zoomed out on my 4 hour on my daily and realized price is making higher lows. Okay, and heading up to a way bigger target. Exactly, way bigger target. Price is going to a way different world. Okay. And if we're gonna risk our money, it's important to get our return for our money. Okay, for sure, for sure. Okay, because when you start hitting those big flips, it makes things a lot better and a lot easier on your account too. Especially when you're risking a little bit of money relative to your account size to make a whole bunch. That's what makes trading. Right? And that's what really sets apart the skill. Okay, because you could throw a million to account and you could still blow it up. Okay, I done seen people throw up crazy numbers in an account and blow it up super duper quickly. I've done it myself too. Okay, so it's not about how much you put in, it's about how much time you put into mastering the charts really and yourself. So cool. So let me go ahead and get this presentation right, and let's talk about margin. Okay, because just like you said, holding overnight. In order to hold overnight, we gotta make sure we have our margin on point. Okay, the margin is super duper important when it comes to futures. Okay, and let me see here. And once again, with the futures profit too, want to just funnel it back into more shares in crypto, um, especially after dips. Okay, so you can apply the same thing just on the higher time frames, even on whatever you're buying, whether it be shares, crypto, options, whatever. Okay, but it's really important to, especially when you start touching that big futures bag, to funnel it back in. Okay, guys, so futures here, take profit. I'm playing for the resistance all the way here. I'm playing for all-time highs. And realistically, you can kind of do that almost every single time. That's one thing though I'm been working on because I'm gonna drop a really big futures thing for you guys. Um, just showing some numbers and showing you guys can grow the account. Um, but let's talk about the April low. So the legendary April low right here, right? Let's say you'd even catch this low, right? Okay, it's kind of hard to catch the ultimate bottom. So let's say you even entered right here, right? Let's say you entered at this higher low right here. Realistically, you waited a couple of weeks. You let market trend up. Let's say you entered right here. If you just entered right here and closed at the V, okay, because the market will always want to chase all-time highs and show up, and it has to make higher lows in order to go in the upwards direction. If it keeps breaking the supports, how is it going to trend? Okay, it has to make higher lows, and that's where break and retest comes in. Okay, all price is doing is taking areas of resistance, turning them into support, and then heading in an upwards direction off of that over and over again. Okay, so that's why if an area invalidates an area of support, okay, that it decided to hold, that means that price doesn't want to continue in the upwards direction. Okay, at least at that point in time. Okay, but if price continues to make higher lows even after bursting up and then down, that's definitely letting you know something. Okay, that's letting you know that, okay, price wants to continue in a bullish direction. And if price wants to continue in a bullish direction, realistically, you can just hold to all-time highs. Okay. With pretty much no consequence. Okay, so it's about really the perspective of everything in the market. Okay, once again. So you could either take thousands of trades to this upward cycle, okay, or just take one big giant trade and hold it for, let's say you entered at this higher low down here, okay, you held it up here, and then you held it for 5,000 ticks. Okay, there's some people in Forex trades I've seen that have still not closed it, like to this day. Okay, they've put in like $10 and now their account is like in six figures plus. Okay, just because they just planted that seed. And especially when you do that on something like futures. Now, futures though, there is expiration dates. So I will say that the expiration dates do kind of prevent you from just holding for like a long time like that. But a lot of the times things happen quickly. Like this isn't even that long, honestly, from May to September. I think the expiration date is, there's a September expiration date. So you could still hit really big, giant, chunky trades, even from this higher low to this one up here. Still 2,000 ticks. Okay. So a lot of the times, if you're playing for like 400 plus ticks, you're going to be, yeah, that's going to be like a pretty good trade ideally. But what really matters the most is from where your stop loss is not going to always be the same amount of ticks every time. Okay. Because it also depends on your entry. But depending on where your stop loss is, then your take profit should be 1 to 3 and relative of that, at least. Okay, especially on futures, just because it cushions you. If you play for 1 to 2, then you only have like one more room for error before like certain punishment kicks in. Okay, so playing for a 1 to 3 really gives you that room for your account to breathe. So we go and put the lesson here. Yeah. Yeah. Okay. So yeah. So once take profit gets hit. Yeah. Yeah. So once take profit gets hit, literally wait for another pullback and then get back in. Exactly. Yep. Really just keep it that simple. All right, let's go and let's talk about futures trading margin. Okay, the deposit system of trading. So, what is margin? So, margin is not a fee, it's pretty much a good faith deposit. So, say for instance, when you're signing up for a credit card, okay, sometimes the credit card company might ask for an initial deposit of like $100, but then the credit card would give you $500 worth of credit to spend. Futures works very similarly. So, here's an analogy. So, or you could say you wanted to rent a super expensive console. Okay. You could put down a deposit to prove that you won't break it. And if you return it safe, okay, then you get the deposit back and you get to use the console. Okay. So, futures is pretty much like a trading loan almost, but depends if you're using it for day or overnight trading. Okay. There's going to be two different costs. So if you want to hold the console overnight, it's going to be a different cost than it is for just using the console during the day. And futures contracts are huge. Okay, you don't need the full amount to use it during the day, but you're going to have to cough up more money if you want to use the console overnight. Okay, so let's learn the difference between the money you need to start initially and the money that you need to use futures contracts overnight. Let's jump into it. So let's talk about the power of leverage. So controlling big things with small amounts of money. So leverage allows you to control a massive contract value with a small account balance. Okay, and the magic multiplier in it. Okay, so imagine having $1,000 but being able to buy $20,000 worth of Bitcoin futures. Okay, in that instance, the math would be a 20x leverage. Okay, and the catch. So it makes wins bigger, but it also makes losses happen quicker. So it's like driving a race car that goes super duper fast, okay? But if you crash, then it'll hurt way more than crashing like a bicycle, for example. Okay, because a bicycle, you're on it, you're going pretty slow. Okay, but if you're driving super duper fast in like a SRT and you crash, then that could put your life at risk. Okay, just because the amount of speed and power that you're controlling. Okay, so futures, yes, you can turn up an account, turn $50 and $10,000 to $10,000 or etc. Okay, whether you're trading crypto futures, normal futures, or whatever. Okay, but you can also quickly lose that $10,000 by making the wrong decisions. Okay, so leverage gives you a lot of power to turn up your account, but you can also turn down your account just as quickly if you're not disciplined. So initial margin. So the ticket enter to ride. Okay. So initial margin. It's going to be really, really important. It's the minimum amount of cash that you must have in your account to open a new trade. Okay. So the math involved into it. It's usually a percentage of the total contract value. Okay. For example, like 5% or 10%. Okay. So if you have $4,000 in your account, but the initial margin is 5,000, okay, it wouldn't even let you trade. Okay. It would say access denied and the trade would not be able to be entered down. Okay. But if you have $1,000 in your account, but the initial margin is 500, you would be able to open up a trade. But here's the catch. Okay. If your account goes beneath that $500, your account would be what's called liquidated. Okay. And when your account gets liquidated, then they take the remainder amount that's underneath the $500 and put your account to zero. And the dangerous part about it is that if price decides to clip past your stop loss or clip past underneath your initial margin value, okay, if you go underneath the initial margin value, your account could potentially go into negatives. Okay, then you'll owe the broker money, etc. Okay, and they'll definitely be wanting that back, whether through suing you or whatever. Okay, so decide here, okay, what the initial margin is, and try to make sure your account has more value than that. Okay, you do not want to get liquidated for no reason. It's just a loss of currency, pretty much for no reason. Okay, it's happened to me. Okay, when I wasn't too sure what margin was when I first started trading futures. So it's not something I want you guys to go through. So the maintenance margin, okay, keep your account alive at a certain level. So the definition of maintenance margin, okay, it's the minimum amount of equity that you must maintain to keep the trade open after it starts. Okay, and lower limit. Okay, this number is usually lower than the initial margin. Okay, and daily fluctuations. So as your trade loses money, your account balance drops. Okay, and you still must stay above this line. Okay, so keep in mind, even while you are in a trade, your account balance will fluctuate, and it still matters. If your account fluctuates underneath a certain amount that whatever you're trading requires, then your account will be liquidated. Okay, let's say you're trading the NASDAQ, okay, the NQ futures, okay, on Trade of 8 as of 2025. The day margin, I believe, is $1,000, okay. So if you're in a trade, okay, and your account goes underneath $1,000, then your account has a potential chance to be liquidated. Okay, and they would just take all the money underneath that. Okay, and your account would be at zero. Okay, you do not want that to happen. So futures, it's a lot of power in it, but you can also destroy your account just as quickly. So I really will show you how disciplined you are. Okay, so keep your account above the margin amount, and also know that margin amounts can fluctuate too. So a lot of people, I'm not too sure, know this. So margin amounts fluctuate, especially on news dates. So dates like CPI, PPI, Consumer Price Index, certain rates. So you can check all the news out on sites like Forex Factory and stuff like that. But a lot of the times, and on certain brokers, margin can change. Overnight margin can change, especially depending on if there's news or not. Okay, so keep heed of that. Okay, pay attention to the margin at all times. I do not want you guys to get liquidated and lose money for no reason. Okay, we got too many things to hold down, too much business to handle. Okay, keep on top of your numbers. Let's head over to the next slide. So getting margin called, okay? So when your account's on low fuel, it's on E, okay? And if your account balance falls below the maintenance margin level, it's gone, okay? They will take every dollar in your account, and it hurts. You do not want that to happen, because it's not even like you lost the trade and then you blew up your account. No, you didn't have your account at the certain threshold, and they took the rest of your dollars. But rightfully so, though. If you break the agreement, they'll take the rest of the money. Okay, if you agree to have $50 in your account in order to trade a micro contract, okay, and your account goes to $48, they're taking that. Okay, and your account's going right to zero or into the negatives. So keep heed. Okay, and the demand, the broker will demand you to pay or deposit more money immediately to bring the balance back up because you lied to them. Okay, you broke the broker's heart. The broker was like, wow. Okay, and there's plenty of times. Okay, once again, I broke the broker's heart. Okay, I got liquidated a few times, especially very, very early in my futures career. Okay, didn't really understand margin, didn't understand overnight margin, especially tried to hold overnight. Okay, and then through that, I learned. Okay, and I'm grateful I get to come on here and let you guys know. Okay, because you do not want to get liquidated. And if you don't add the money instantly, the broker will forcibly close your account, close the trade, and really want their money back. Okay, so for example, if you borrowed a bike, okay, or if someone loaned you your car, okay, let's say you had a rental car, okay, and you said, all right, I'm gonna go ahead and give you $500 in order to drive the rental car, but you can't let the gas go below a quarter, otherwise the car will literally blow up. Okay, let's say you're driving the car, you're having a nice time, the gas is at like 2 quarters, you're not tripping, you're still having a lax day, you're vibing out. Okay, the car's at a quarter. Okay, you're still vibing out, you're chill, you forget. Okay, you're not on top of your business. Okay, and then boom, you look at it, account, car underneath a quarter, and then it blows up. Okay, so I've blown up my account by looking at the trade profit numbers instead of looking at the actual margin numbers. Okay, a couple of times. So don't let that happen. Don't get too lost up in the charts, especially when your account's already on its last legs. Just, it's all right, pray on it, boss up, hustle up some new money on, okay, and put it back into your account, and then you guys can run it back up again. Don't try to trade on a quarter. Okay, don't drive the car on a quarter. Don't do it, it'll blow up. Okay, if you know the margin amount is $600, don't try to trade with $670 trying to trade with the little $50 stop loss, because you're not taking things into account when you do that. You got to pay broker fees, and then there's going to be slippage on your stop loss, etc. A lot of other things that come into account while you're trying to micromanage every single number, trading out of desperation and survival mode. It'll really come bite you in the back. Okay, don't do that. I'm telling you, it's a lot of things that you might not realize. Okay, trading, hustle up, okay, boss up a bit, and then come on the charts. Okay, there's plenty of times I've had to take a step back. Okay, get right with God, get right with myself. Okay, have a new perspective on the charts, and came back way stronger. Okay, whether if I didn't like my results, or plenty of times where I was really, really happy with the money I was making in the market, and I had to just control myself. Okay, because I know what I did in the past. Okay, I would make a bunch of money from the market and then just blow it all up. Okay, so plenty of times in the market where I've had to make some good money from the market and pause, especially trading futures. Okay, I would hit like some really nasty trades and just pause. Okay, just watch the market for a couple of weeks, for a couple of days, and just being really patient on the charts with yourself and in life, it's really gonna help you. Okay. So even if you make a bunch of money from trading, don't feel bad if you want to just take a couple of days away from the charts. Okay. Or if you want to just take a couple of weeks to just study the charts, see how price action moves, hold on to that money, reinvest that money, that's going to be fine. Okay. You're not in no race with nobody. You're not in no competition with nobody. You're in your bag. Okay. Get in stack mode, stay down. Okay. And figure out what works for you guys. Okay. Once you start getting your criteria down as far as your entry criteria, things get a lot easier. But one thing you do not want to do is trade out of desperation. Okay. Because if you do that, or try and trade when your account's on its last legs, when it comes to futures, options, everything else, you can kind of do that. You can throw in like your last bit of money, and especially on options, since the profit potential is unlimited and your account could potentially flip. But futures, do not play with your account like that, because then you're going to end up losing more money in the long run, paying off margin call fees. Okay. And I do not want that for you guys, inshallah. So let's head over to the next slide. So initial versus maintenance. Okay, here's a side-by-side comparison. So initial margin, okay, it's going to be at the very start. Okay, it's going to be the entry. Okay, and it's pretty much just going to be telling the broker, like, yeah, you know what, I have the money in order to be in this trade right now. Okay, so always keep extra money in your account. Never trade right at the limit. Okay, or a small win will blow your house down. Just please do not do that. Okay, don't do that. And then maintenance margin is going to be during the trade. Okay. So that's going to go ahead and be it. So some key takeaways. Okay, leverage. Okay, it's going to be really powerful, but can also be dangerous if you are not disciplined. Okay, do not lead with your flesh. Okay, pray to God for discipline and stay focused. Even when you start touching that good money, stay focused. Okay, and the initial margin is going to be your entry ticket. Okay, and the maintenance margin is your survival line. Okay, and liquidation, it happens when you run out of money. Okay, and you don't meet the maintenance margin. Okay, if they tell you, yo, we need $500 in order for you to have this trade open, and they don't care if you're in a trade, if your account goes underneath that $500, goodbye. Okay, you're not allowed to trade with this right now, and you owe us some money. Okay, so it's like that. Futures is very ruthless, very hardcore. The most hardcore instrument, futures is the discipline instrument in itself. Okay, shares, you can get rich by not looking at the charts. Plenty of millionaires created by people who just hold stocks. Plenty of millionaires by people who just hold cryptocurrency. But I don't believe there's any futures millionaires by anyone who doesn't look at the charts. Okay, it's not something you could just throw a bunch of money into and try and just make a bag. No, futures is very, very different. You have to know rules, have to play very intricately, and you have to just really just change yourself completely as a person. Okay, so stay safe, trade smart, and head over to Stackmode.net for all trading education. Stay prayerful to God and keep grinding. Peace. All right, cool. So that's gonna go ahead and be the futures margin video. Okay, so every broker is gonna have a different margin requirement too. Once again, Tradovate. So that's gonna be Tradovat. Personally, my favorite broker. I believe they just got things added such as debit card transfer as well too. So Tradovate is definitely my favorite broker. Been using them for a few years now, since like 2023. Very, very reliable. Anytime I've ever withdrawn money from them or deposited money from them, yeah, was really, really nice. So big fan of Tradovate. Money hits your account very quick. I'm gonna go ahead and pull up NQ before we close out. Yeah. Yeah, yeah, for sure. So yeah, so 15 minutes gonna be the last time frame. So yeah, so exactly that. I'm gonna start on my weekly, read the bigger picture, and I'm gonna see if we can even get a 15-minute entry. Okay, because the thing about the 15-minute is it can be capped. Okay, because you could be past all-time highs, right, and see a 15-minute V, but then on the weekly there's no resistance above current price. So let me try to find a good example of that actually. Great question. Say Google, right? See how Google I'm on the 15-minute, right? So Google, right? Boom. On Google, I might see, okay, there's area of resistance here. But then I get on my weekly and there's not really any V formation. Like this is at super duper all time highs. I would not buy up here. Let me try to find a little better. See, these are a lot better example, like a meta right here. Looking for that sweep. Top left of the V, bottom of the V, up. Okay. And then even AVGO. Okay, the 15-minute could be telling just straight lies. Okay. 15-minute, I could see this. Okay, if anything, this could be a V. Okay. But then I get on my weekly. Okay. And then there's like, it's a lot different on futures though compared to options, though, I'll say. But it's just not, it's not good to live on your 15-minute. You gotta make sure you have the full big picture of everything. Okay, so if I'm, yeah, ah, it helps to see the higher lows on the 15-minute. It's the same thing, but seeing it on the 15-minute for futures really, it really does help. Me, for example, um, you could go to the 15-minute just gives you that intricacy that you need to see. You could use the hour potentially. Um, yeah, the 1 hour could be decent too. It's like a bigger version of the 15-minute. You can still see the higher lows exactly how you need. We got one right here, one here, 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 here. Okay, so we got some higher lows, you know? But it's just the 15-minute is just really good though. Yeah, just seeing everything like that. But just even on the 4 hour and then the 1 hour, and then price decided to top out here. And where did it go up here? Actually, no, it stopped up here. And then it fell. Okay. And then price needs to break this. So after price falls is the most exciting time. Okay, so price didn't just fall here for no reason. Okay, so we can see it met up with this area of resistance here, and it chose this area to fall down at. Okay, so after price falls on futures, you want to look for a price to see if it wants to make a higher low. So that's why that 15-minute is going to be really important. Okay, so check out the higher low here. So we got this low right here. This low is higher than this low. This low is higher than this low. This low is higher than this low, and vice versa. Okay, down there. So Price decided to, and how we detect that is price bottoms out, runs up, bottoms out higher than it previously did before. Okay, it didn't keep falling back to the same area or break it down. It made progress. It went in an upward trajectory. Okay, it started going up. Okay, so price decided to bottom out again at this recent low, which is higher than this low. Okay, then price did a heavy burst. Price has to go up to come down and go down to come up. Okay, just like how life works. Okay, we got to lose in order to get better. Okay, and just vice versa. Okay, so boom, price decides to bounce up from this low here. Okay, had enough of it. Okay, and it came up. Boom, went to the top. Okay, fell down a little bit, but it didn't go lower than when it did before. Okay, it made progress. Okay, it didn't go that far down. It made progress. So after price does that heavy burst up, look for price to make that left side of the V, which is just sellers coming in, really. But I just try and say left side of the V to make it simple. But it's just sellers coming in. You just want sellers to come in, wait for price to trend down, okay, and then wait for price to make that low that's higher than the previous low. Okay, and you could wait and see for that when you got like multiple 15-minute candlesticks above a obviously looking low. Okay, a lot of the times you'll see like a wick and a upwards burst. Okay, so yeah, honestly, yeah, I'll say 2 to 6. It'll always be two, yeah, 2 to 6. Yep, 2 to 6 candlesticks. The earlier you enter, the more of a risk you have. The later you enter, the less profit you'll make, but the more confirmed of a opportunity you'll have to win. And your stop loss has to be bigger, so the more money you'll have to put up too. So you'll never have the same exact entry, same exact stop loss tick, same. No, trading isn't like that. But you will have the same criteria. Okay, there's going to be times where you do enter later than others, but it'd still be a pretty good trade as long as it's within your risk reward parameters and your risk management parameters. Okay. Just sometimes people think that because they didn't get the ultimate super duper bottom low that it's like, no, bro, trading doesn't work like that. Okay, there's going to be multiple entries, multiple re-entries, and some people even scale in. Okay, I don't agree with scaling in just because it doesn't make logical sense to scale in, but whatever works for people, honestly. So yeah, yep, yep. And if you notice your contract is like gonna expire, because that's another thing too, which we'll talk about in the next session. If your contract's gonna expire and you can't play for like the ultimate highs, then you could just choose a area of resistance. Like, you could see this area of resistance decided to meet up with over here. Okay, so you could just choose an area of resistance as long as it's within your risk reward parameters. Um, it's like quarterly, yeah, around like every 3 months, yeah, like 3 4 months. Yep, yeah, for sure. Yeah, yeah, for sure. And thank you. Yeah, I just got your Stripe payment, and then yeah, you got 9 more sessions after this. So let me see. And I know you said you want to do 2 sessions a week. We could do one on Monday, and then we could do another one on Saturday. We could do Mondays and Saturdays if that works. Okay, cool. All right, I'll book you same time. Actually, we'll do 7 o'clock Monday. That works. I think my calendar should be free. I'm gonna send you the Google Meets invite in your calendar. Cool. Yeah. I'm free at that time on Monday. Okay. Cool. Monday 7 p.m. should be in your Google Meets calendar. All right. I'll speak to you then. All right. Peace.